Hey, good morning. Welcome to the Mortgage Rate Forecast with Scott Chris. It is April 27th, and you know where we're going to start. Let's look at these charts. So we took really a pretty big hit last week, latter half of last week, as well as the early half of this week, and the bond market definitely sold off. We were close to our best level since the election, actually, last week. So really good market, but we did peak out here. We're currently trading at 102.78 this morning. Our supports coming in below us at 102.40, and our resistance above us at about 103. You can see how difficult it was to break through 103, and we only broke through it for a couple days. So here's the reports. All the reports were actually very favorable for bonds, and this is great news because we touched 102.40, which was our support level twice, not only yesterday, but the day before, and in intraday we actually broke below it. So I was a little nervous because if we would have broke down and closed below 102.40, that could have really solidified the downward trading pattern that we saw with the bonds. But we didn't. And with some bad reports that came out today, we're back into some more solid grounds. So here's where we're at. Durable goods came out, missed. Unemployment, missed. Pending home sales, terrible. And so, which is interesting. I was talking to one of the presidents with my company, and our mother company is Lennar, and their home sales are looking really good. So it's kind of interesting to see the whole economic home sales are so poor, but as at least us as a company, they feel that we're doing very, very well. So yeah, watch that pending home sales. The 7-year Treasury auction is going to be coming up a little bit later on today. It could have a good impact on the bond market. We'll see. Only time will tell. But I don't think it'll be a major mover by any means, guys. The GDP is coming out tomorrow. GDP, if you're not familiar with it, is the gross domestic product. It's basically how productive we are. And I was watching a documentary last night and the night before on basically like social economics, and they talked a lot about the GDP, and really interesting. There's two ways to have a good GDP, either by massive people or high efficiency, or of course, you know, a combination of the two. So the GDP is really important because it shows how productive we are as a nation, and as you can tell, I mean, that's going to always have a pretty big impact on the economy. So we'll see where the GDP is at. If it misses, you know what, we could see bonds go up above 103 potentially, and get back on top of that. So it's kind of exciting tomorrow to see what happens. So to kind of quantify where we're at, we're currently traded at 102.78. Last month the average was right around 102.90. We're about 88 cents better. Freddie Mac reported, and the source is down below, reported that the average consumer received a 4.2 rate and paid a half a point to get there. Well, if we're trading 88 cents better, that same consumer, today's market, might be getting the same rate, but actually getting a little bit of a credit back. So that's the math. Okay, let's get to the forecast. My last projection hit right on. That's great. Good job. That makes me feel good, just because that means I'm throwing out there hopefully some intelligent projections for you guys. So here's where I'm going to go this time. Both the analysts that I track are pretty are not completely bullish, but they're kind of bullish. It's really going to depend on that GDP, and so as far as their long-term projections, they're still pretty neutral. It's still kind of hard to see, guys. So here's what I'm going to say. My forecast is 102.60, which was about 18 cents worse than we're at now, to 103.20, which is 42 cents better through next Thursday. So I'm getting a little bit aggressive, guys. And you know what? If you subscribe to this, you know I'm not like a really aggressive guy. But I think if the GDP misses, we could see something really good. If it hits, I don't know if we're going to really drop below 102.60, or at least 102.40. So anyway, that's my projection, 102.60 to 103.20. I know it's a little aggressive, but hey, you know what? Let's see what happens. Okay, that's it for now, guys. Click the ugly face at the top left if you'd like to subscribe. You'll just get a little notification when we release a new forecast. And at the top right, you're going to see Mortgage Bonds 101. If all of this is new to you and you're like, hey, I just want to get a mortgage, I just want a decent rate, you know, how does all this bond stuff impact me? Click on Mortgage Bonds 101. It's a great video to kind of show you the basics that you need to know as a consumer when picking out your mortgage. Anyway, that's it for now, guys. Leave that comment, hit that like for me, please, and have a great day. We'll see you next week. Bye-bye.